Ever found yourself pondering over why the rich buy assets? It's a question that has perplexed many, a riddle that seems to have a straightforward answer, yet holds layers of complexities beneath the surface. The world of finance and wealth is a fascinating one, filled with intricate strategies and nuanced decisions. The rich, it seems, play a different game altogether, navigating this world with a unique set of rules. They don't just work for money, they make their money work for them. But how do they do that? What secret ingredient do they add to their financial recipe that seems to multiply their wealth exponentially? The answer lies in a simple yet profound word: assets. Now you might ask, what's so special about assets? Well, assets are the golden geese of the financial world. They are the income-generating machines that keep on giving, the magic wand that turns money into more money. The disparity between the rich and the poor isn't just about the size of their bank accounts. It's about the financial decisions they make, the financial knowledge they possess, and the financial habits they cultivate. While the poor often spend their hard-earned money on liabilities, the rich invest their money in assets. This fundamental difference in approach towards money management is what creates the widening chasm between the rich and the poor. The rich understand that buying assets isn't just about accumulating wealth. It's about securing their financial future, creating a safety net of passive income that allows them to live the life they desire. So, if you've ever wondered why the rich seem to get richer while the poor struggle to make ends meet, remember this: it's not about how much money you have, it's about what you do with it. This, my friends, is the mystery of wealth. It's not about earning more. It's about investing smarter. It's not about chasing money, it's about attracting it. Let's delve into the world of assets and understand what really sets the rich apart. First things first, what exactly do we mean by assets? When we talk about assets, we're referring to anything that has value and can be converted into cash. Think of assets as the building blocks of wealth. They're the things that you own that can make money for you, even when you're not actively working. There are many types of assets, and they can be tangible or intangible. Tangible assets are things you can physically touch, like real estate. You know, the houses, apartments, and office buildings you see around you. These are assets because they can generate income through rent or increase in value over time, providing a return on investment when sold. Then there's the world of intangible assets. These are things you can't physically touch, but they still hold value. For instance, stocks. When you buy a share of a company, you're buying a small piece of that company's future profits. Even though you can't hold a stock in your hand, it's an asset because it has the potential to generate income. And let's not forget about businesses. If you own a business, that's an asset too. Whether it's a corner store or a tech startup, businesses are assets because they can bring in money through sales and profits. But remember, not all assets are created equal. Some assets, like a savings account or a bond, are considered low risk because they provide a steady, predictable return. Others, like stocks or real estate, are considered higher risk because their value can fluctuate based on market conditions. But with higher risk, often comes the potential for higher reward. So when we talk about assets, we're talking about things that can generate income, increase in value, or both. They're the tools you use to build wealth, and the more of them you have, the more potential you have to grow your wealth. So now that we have a basic understanding of assets, let's see why they are so important. Why do the rich always seem to be buying assets? Well, the answer isn't as elusive as you might think. In fact, it's quite simple. Assets are pivotal in generating wealth. Let's delve a bit deeper. What exactly are assets? In the realm of finance, assets are resources with economic value. They can be anything from real estate and stocks to businesses and intellectual property. The key characteristic of assets is their potential to provide future benefits, mainly in the form of income or appreciation. Imagine assets as golden geese laying golden eggs. The more golden geese you have, the more golden eggs you get. These golden eggs represent a steady income stream, and over time, the geese themselves, the assets, can grow in value. This is how the rich use assets to accumulate wealth. It's not just about the immediate income they provide, but also about the long-term gains they can achieve. Now, you might be wondering, why don't we all just buy assets? The answer lies in the barriers to entry. Assets often require significant upfront investment. This is where the rich have an advantage. Their existing wealth allows them to overcome these barriers and acquire more assets, thus perpetuating their wealth cycle. However, it's not just about having the means to buy assets. The rich also have the knowledge and experience to identify and invest in valuable assets. They understand the market trends, the risks involved, and the potential returns. They know how to diversify their asset portfolio to maximize profits and minimize losses. In essence, buying assets is like planting seeds. The rich don't just plant any seeds. They plant the ones that can grow into mighty trees, providing shade and fruits for years to come. They nurture these seeds, water them, and watch them grow. So you see, assets are not just possessions for the rich. They are strategic tools for wealth creation, a means to an end. It's clear that assets play a significant role in wealth creation. But how exactly do the rich go about acquiring these assets? Well, that's a story for another time. The rich seem to have a different playbook when it comes to financial decisions. Imagine a chess game where each piece represents a different financial strategy. The rich, they're not just playing the game, they're masters of it. They see the entire board, anticipate moves, and strategize accordingly. Let's delve into the key strategies that the affluent use to acquire assets. First off, the rich understand the power of investing. They know that money sitting idle in a bank account is money not working for them. So, they put their money into assets that have the potential to generate income or appreciate over time. This could be real estate, stocks, bonds, or even starting their own businesses. The goal is to create a steady stream of passive income, money that flows in without the need for active work. The rich also have a knack for spotting opportunities where others see risks. They're not afraid to venture into uncharted territories, to invest in emerging markets or innovative startups. They know that with higher risk comes higher reward, and they're prepared to weather the storm for the potential payoff. Another crucial strategy of the rich is leveraging debt. Now, this might sound counterintuitive, but hear me out. The rich use debt to their advantage to acquire more assets. They borrow money at a lower interest rate to invest in assets that yield a higher return. This is called good debt, and it's a powerful tool to grow wealth when used wisely. Lastly, the rich prioritize financial education. They continuously learn about financial markets, investment strategies, and economic trends. They understand that knowledge is power, and staying informed is key to making sound financial decisions. These strategies aren't exclusive to the rich, though. Anyone can adopt them. It's all about shifting your mindset, understanding the power of investing, and making your money work for you. Now, you might be wondering, how can I start buying assets like the rich? Building an asset portfolio may seem daunting, but it's not as complex as you might think. Let's break it down into manageable steps. Firstly, it's crucial to understand that the journey to building a solid asset portfolio begins with saving. Not just saving, but disciplined saving. This is the foundation upon which your asset portfolio will be built. It's like the seed money for your future investments. So, start by setting aside a certain percentage of your income on a regular basis. Once you have a decent amount saved, it's time to take the next step, investing. Now, investing isn't about picking a hot stock and hoping for the best. It's about doing your homework, understanding the market, and making informed decisions. It's about diversifying your investments. Real estate, stocks, bonds, mutual funds, they're all different types of assets that you can invest in. Each has its own risk and reward profile, and the key is to find a balance that suits your risk tolerance. But it's not just about saving and investing, it's also about financial education. Knowledge is power, and in the world of finance, it's your greatest asset. Take the time to educate yourself about the different types of assets, how they work, and how they can help you achieve your financial goals. Read books, attend seminars, listen to podcasts, engage in online courses. There are countless resources out there that can help you improve your financial literacy. And remember, building your asset portfolio is not a sprint, it's a marathon. It's about consistency and patience. It's about making wise financial decisions over a long period of time. It's about understanding that wealth isn't built overnight, but over years, even decades. In conclusion, building an asset portfolio involves saving, investing, and educating yourself financially. It's about understanding how money works and using it to build wealth. And most importantly, it's about starting. Start small if you have to, but start. It's never too late to start buying assets and building your portfolio. Financial roadblocks are inevitable, but they are not insurmountable. Let's face it, financial roadblocks are a part of life. These can be unexpected expenses, sudden loss of income, or the daunting task of paying off debt. But here's the kicker. These roadblocks are not dead ends. They are merely detours on your journey to financial freedom. The first step in overcoming financial roadblocks is to acknowledge them. Ignoring your financial problems won't make them disappear. It's important to face them head-on, assess your situation, and create a plan. This might involve cutting back on expenses, finding additional sources of income, or consolidating your debt. Next, remember that financial discipline is key. It's easy to get swept up in the moment and make impulsive purchases, but this can lead to financial strain. By sticking to a budget, you can ensure that you're living within your means and saving for the future. It's all about making conscious decisions about where your money goes. Also, let's talk about resilience. Overcoming financial roadblocks requires a lot of it. There will be setbacks and there will be challenges, but it's important to stay the course. Your financial journey is a marathon, not a sprint. It requires persistence, patience, and a lot of determination. But what if you're facing a financial roadblock that seems impossible to overcome? Don't despair. Seek professional help if needed. Financial advisors, credit counselors, and debt relief services are there to help you navigate these difficult times. You're not alone in this journey. Lastly, always keep your eyes on the prize. Remember why you're doing this. Whether it's to secure a comfortable retirement, provide for your family, or achieve financial independence, let your goals be your guiding light. We all face financial roadblocks. They're not pleasant, but they're not the end of the world either. With the right mindset and strategies, you can overcome them and continue on your path to financial freedom. Remember, the journey to financial freedom is a marathon, not a sprint. We've covered a lot of ground today, so let's summarize. We've journeyed together through the mystery of wealth, understanding assets, the strategies of the rich, building your asset portfolio, and overcoming financial roadblocks. It's been quite the journey, and if you've stuck with us, you're already well on your way to financial freedom. The first thing we explored was the mystery of wealth. We discovered that wealth isn't just about having cash in the bank. It's about having assets, things that put money into your pocket. These assets can be anything from real estate to stocks, from bonds to patents. The rich understand this concept, and that's why they focus on increasing their assets rather than their income. Next, we dived into understanding assets. We learned that assets are not just possessions. They're investments that generate income. They're the golden geese that lay golden eggs. The rich don't kill the goose for a quick feast. Instead, they nurture the goose, so it keeps laying those golden eggs. Then, we took a closer look at how the rich engage with assets. The rich, we discovered, buy assets that generate income and appreciate over time. They understand the power of compound interest and the beauty of passive income. They know that assets are the key to financial freedom. The fourth stop on our journey was exploring the strategy of the rich. The rich don't just buy assets, they strategically acquire and manage them. They diversify their portfolio, spreading their investments across different asset classes. They understand the importance of risk management and the power of leverage. They buy low, sell high, and always keep an eye on the market trends. Then, we moved on to building your asset portfolio. We learned that it's not about how much money you make, but about how much you keep and how hard that money works for you. The rich don't work for money. They make their money work for them. They reinvest their income into assets, creating a cycle of wealth creation. The last leg of our journey was about overcoming financial roadblocks. We discussed the common obstacles people face on their path to financial freedom and how to overcome them. We learned that financial literacy is the key to breaking the chains of financial bondage. The rich understand this, and that's why they educate themselves and others about financial matters. We've explored the strategies of the rich, and now it's time for you to apply them. Remember, wealth creation is a journey, not a destination. It requires patience, persistence, and a whole lot of learning. But the rewards are worth the effort. Next time you wonder why the rich buy assets, remember, it's their secret to financial freedom.